Good evening, everybody. That was the new purchase this week. Not very exciting, other than the fact that it's only got 6,600 original miles on it. So I figure it was worth cleaning up and playing with. That's a 1953 Pontiac Chieftain. Okay. All right. As we can see, we had an up day in the Dow, but if you look at it very closely, they opened it above. Where did they open it today? 1626. Oh, I'm just gonna have to give. Let's see. That was. Yeah. Yeah. Only does this day. It opened a little bit higher than where it closed. Oops. Just we'll have to forewarn you. I've got a delivery coming here any minute, so there might be about a 7 minute break this evening. But I okay. As a matter of fact, it's here right now. So if you will all just hold on for a few minutes, I'll be right back. Don't go away, please. Okay, sorry about that, everybody. That was a delivery that was supposed to have occurred an hour ago, but we had some hard rains here. Whew. Okay, so even though we had an up day, it wasn't our reversal signal. It wasn't a bullish Harami. It wasn't a bullish engulfing. And on top of that, even though the NASDAQ had a positive day, it wasn't a very convincing day. It traded lower after they opened it. Yeah, I'm trying to catch a breath. It's actually a big oak sideboard with a nice big mirror on it. I don't know what I'm going to do with it, but you got it. Yeah, I suppose. Where are you, John D? It's supposed to be snow and rain here tonight, which is discouraging because all the tulips or daffodils were coming up. Let's see, no charts and no sound. Anyways, what was not the compelling indication today was a strong buying. It was just kind of buying in a downtrend. Even the S&P, uh, even though it opened higher and closed higher, it didn't move from where they opened it after a full day. So that's pretty much, Paul, you're probably logged in twice. So, anyways, right now all we can do is assume that we're still in a downtrend. Stochastics aren't to the oversold area, and we're not back up above the T line. Even the Dow transports started out very strong today, and then by the end of the day, at one point they were almost back. I guess they did go negative during the day. So let's take a look at some of the commodities. Crude oil prices still in a steady uptrend ever since our little doji gap up best friend coming right off the 50-day moving average. Gold prices still in a steady uptrend. Let me take a gander here and see if it looks like we're in the next wave up. Notice how they started this wave. They started gapping it up, doing dojis, but continued it higher. So that tells you there was force coming into this next trend. And silver, also not as exuberant as the gold prices, but kind of maintaining a flat. I wouldn't be buying. I wouldn't be selling silver right now. Soybeans, still in this slow, steady uptrend. And cotton, I traded some cotton, but closed it out. It had done a gap up from a doji and closed above the T line. So this one I'm probably going to be going long on positive trading. Coffee was backing off a little bit, but notice what it did. It hit right on the T line and came right back up again. So this one should be bought, especially if it breaks up through this level. Sugar and cream. Sugar is still in a strong downtrend. Notice the gap down from the T line, and they couldn't hold this level right here, meaning they're going to come back to one of these gaps to fill it. All right, what else we got? Interest rates. 10-year notes, still in this steady uptrend, kind of doing a double doji. It means if it opens positive tomorrow, got a good chance of breaking out through this level, going to lower rates. The dollar, well, this thing is slowing down quite a bit. The dollar looks like it's done a doji gap up. Now this makes it very simple. If they open this positive and start trading positive tomorrow, you want to be buying the dollar. Bottomed out right where it bottomed before. Notice how it bottomed before, spinning top, doji, big move to the upside. So this one the dollar can be bought on positive trading tomorrow. And the euro did a gap down from a spinning top. This one can be shorted on weakness tomorrow. Japanese yen looks like it ran into resistance right here. We'll watch to see if this opens lower. If they did, they're taking it back down to the bottom of the trend channel. Let's see, some of the meats. The meats didn't look like they were doing anything real active. The cattle's just kind of moving sideways right now. And lean hogs has been backing off ever since it reached highs, but bouncing up off the 50. So this might be a buy right in here also. Let's see, what else was there? Gold, silver, we got most of it. Coffee, we did. Cotton. All right. Okay, some of the charts that looks good. Any comments? No, there's nothing that relates to right now the dollar. Remember, it's when commodities get to an extreme that they will start affecting the markets. So right now, there's nothing really at any extreme. The dollar is just kind of in a range. Had the dollar been heading down further and further and further, or going up further and further, then people start taking it into consideration as far as what it might do to equities. But when they're not really doing anything, then they're really not affecting the equities all that much. Okay, we came out and somebody had mentioned ORMP on Friday which was a fry pan bottom bouncing right off the 200, kind of a scoop fry pan bottom. So we were buying today, even though it backed off. The questions that were in the chat room this morning was, where do we put our stops? And the reason we're buying this is because of the fry pan bottom pattern. So the place that would tell us that the fry pan bottom pattern has been breached would be a close back below the T line. That would kind of break this trajectory. So right now, even though it might be bobbing around for a little bit, you stay long as it stays above the T line. And VISN needed to open positive and trade positive today. The fact that it opened and started trading down told you it was time to get out of this one, that they needed to open up stronger right here at the T line, which they didn't. So that pretty much tells us that this trend channel is still in effect. I wouldn't be surprised if they couldn't take this all the way back down to the 200-day moving average. SLCA is one that we're continuing to hold, only because there's nothing here that tells us they're going to be taking it below the T line. You continue to hold this until you see a sell signal or close below the T line. You've got a wave 1, wave 2, wave 3. I saw a lot of discussion today about the trade tricks. If you click up on the top bar above your screen, there's one little icon that has the arrows pointing in. Click on that, and that'll bring your holes. There you go. So as long as we're in wave 1, wave 2, wave 3. Now, some people were saying, well, how do you count the waves? It's not an Elliott wave count, because I'm not planning to hold it for 4 or 5, ABC retracement, etc. I just want to see that there's a wave 1, there's a wave 2, there's a buy signal breaking out of this level, tells me I'm in wave 3. When it gets up here and starts pulling back, and then turns around and goes up, this becomes my wave 1, wave 2, wave 3. So I'm not trying to do anything sophisticated as far as a wave count. I just want to see that what it's trying to do in what would be a common occurrence in investor sentiment. As they take it up, they rest, they take it up, they rest, and those are what create the waves. PES, if you didn't buy this one today, I don't know why these charts are taking so much longer, but this one has now broken out through this sideways movement on a little inverted hammer gap up. So in the last couple of days, it's tried to break out through this level. Today it did. So this tells me there's more upside to this one, again, as long as it stays above the T-line. BWEN needed to open positive and trade positive to stay above get back up above the T-line. The fact that they brought it lower tells us we're probably in a wedge formation now, which doesn't make for a profitable trading situation. This was closed out today. Just because there's no trend to it anymore. You can always buy it back if this does a wedge and breaks out to the upside. Pretty much the reason why we were recommending PLGU, because this has that wedge, and it was trying to break out through the upside. Let's make this a little bit bigger. Tomorrow, if they open this positive, you essentially have a doji sandwich, which means if they move up the same magnitude here, right here, that means they have broken out of this little wedge formation. You want to be buying. On the other hand, if they open lower and start trading in this direction, you probably want to close it out, because that tells you nothing's happened yet on this chart if you're long. CONN was trying to stay up above the T-line, doing this little kind of cup and handle. This one, give it a couple more days. I know we've got a lot of option spreads right at 40, that if it closes above 40, I think the spreads that we bought at $1.60 will convert out at $5. Then for the next move, if this comes up through the 50 on a cup and handle, that makes this target, or fill in this gap, the next target, which kind of coincide with each other. Where would you place a stop? I wouldn't want to see plug trade back below today's low. Mike, I don't know what to tell you. Can somebody help Mike? BWP is the same type of chart, sitting right smack dab at this resistance level, coming out of this big, slow fry pan bottom, which means on this little doji gap up, if they open this positive tomorrow, you definitely want it to be a buyer. That tells you that they're breaking out of the handle of the fry pan, or the beginning of the fry pan, and the 50 is not acting as a resistance anymore. That was a prime example of what this low curve does, especially coming out of a bigger pattern like a fry pan bottom. Notice what we have done here in the last 3 days of trading at the same time that the markets have done this. Well, that's not what happened there. How did we do that? That was just a fine howdy do. And the markets have been doing this. The fry pan bottom has its own build-up agenda, or the slow curve also, with these breakout situations. Um, CPE, oh, that's copper. Copper is not very enthusiastic. Uh, CPE also has this slow curve fry pan bottom. This one definitely could be bought on positive trading tomorrow, especially if it does a doji sandwich type setup. And GDP broke out nicely today. There's that kind of slow curve breakout through the 50. I'm sorry, through the 200. Never got back below the T line. And you can see that the 200 was acting as resistance. More than likely, this will be on a 45 degree from here, moving higher. So these breakouts, when you start seeing these enthusiastic buys, such as a kicker type signal, WBMD, WBMD, oh man, we'll give it a minute. Well, shut up. Well, it does this every night or every session right around this time. There we go. There's that kicker type signal. Smack dab off the 200, gapped it up so it even closed back up above the 50. This should have a 45 degrees. But essentially, this signal right here tells you there's a dramatic change of investor sentiment. More than likely, it's going to be in an uptrend from here. And we're getting some quite a few like this. I say quite a few. There was a handful today. BB, for example, kicker signal. Off the 200, back up through the 50, the T-line, and the 20. Look for a 45 degree to come off of here. Anytime you see these big kicker signals, that means there's a dramatic change of investor sentiment, and it's usually going to last for a while. JSO, JSO did a nice Morningstar signal. This one can be bought on positive trading, especially if it comes up through the 50, because you want to break this little downtrending channel. But this is your best friend Morningstar type signal right off the 200. So the reason I'm showing this is where you observe the obvious. Where do you think everybody decided to buy this stock when they saw that it was going to support at the possibly support at the 200? That's when everybody's attitude changed. And HT, whoops, HTY. Kicker signal. This one you want to be ready to buy on positive trading because you'd have a kicker signal breaking out of this downtrending channel, making your next wave coming up here in about the $46 area. What about profit taking next day after a kicker? Even if they're profit taking the next day, you still should be buying on any signs of strength because that's the whole point of the kicker signal, is telling you there's a dramatic change in investor sentiment, which would now be bullish. So even though if there's profit taking, the probabilities are it's going to start coming right back up again after the profit taking's over. Whoops. All right, UNXL. The bigger the signal, the more compelling it is that there's been a change of investor sentiment. And SWC. SWC broke out with a little gap up through this area. Wave 1, wave 2, going into wave 3, which should be approximately about a 4-point move from here, taking you up into the $20 range. 30s in Houston. Man, oh man, I'm glad I don't live there now. And CQP. Another inverted hammer, bullish confirmation, J-hook type pattern. This one can be bought on positive trading tomorrow. All right, now on the other side of the coin, when there's not a direction of the market that has changed, the reason we recommended shorting TKMR today was this was more of a doji type day on the other charts, but look at where the doji day was occurring. Right here on the last support level, after a bearish engulfing signal telling us that the downtrend was still in progress, that if they opened this lower, it essentially told us we had a doji sandwich, bearish doji sandwich potential, and if this day was equivalent to this day, that meant this day or this support level was gone. They were heading for the 200-day moving average. So this is why knowing what should occur in your signals, patterns, and support levels, if you can see that there's a pattern or if there's a signal setting up that's going to breach a support level, that gives you that much more probabilities that if it starts trading lower, everybody's going to start bailing. So if you're shorting it immediately, you have the advantage of being in the right place at the right time. Same type of setup over on HIMX. A doji sandwich, if it started trading lower today, that told us this J-hook, doji sandwich, lack of support at the 200, kind of slow curve was taking you down further. I think this was down 18% or so on the day. But it just allows you to get prepared. Now, also, it allows you to get prepared. A lot of these stocks open positive. Now, this one wasn't on a recommended list. I was watching this. I mean, this was on the good list as far as shorts. But if they open up positive, it makes the entry strategy very simple. Either put your sell stop right here at the previous day's close or the low, which are about the same. But if it comes back down through there after opening positive, that tells you there's another bearish candle setting up. If we had picked a spot down here to say if it traded below the low of the day or of the previous trading day, you can short it. Well, if it opens higher, just makes it easier. Put your sell stop right there. If it comes down through that level, you're going in the right direction. Beach weather. That's right. Okay, what else we got here? We recommended BGFV a couple of days ago to go short because of the left-right combo at the latest spot. Now, it traded positive today, but whenever you don't see a signal, I'm sure I've got one in here. When you don't see a signal, that doesn't tell you that it's a reversal. All that tells you is it's a up move and a downtrend. That happened to RIG today. RIG has a left-right or a bearish doji sandwich after a big bearish engulfing signal, but it traded positive today. But notice it was not a signal. So I would put still the probabilities in good stead that they will open this lower and trade it back down tomorrow. But this was just a bounce, an update bounce, and a downtrend. And the reason I say that is because this isn't a reversal signal. This is just an update. Had it been a bullish engulfing signal, that would have had a completely different connotation as to what the investor sentiment was in this trade. What else do I got here? Away. We've stayed short on this one for a long while. It showed a little bit of strength today, but by the end of the day, and this is where I've kind of, and I'm going to rephrase this. It used to be that I'd just get all panicky if I had a short position and it was starting to trade up. I'd close it out, but I finally realized that if you just stay with the probabilities, meaning if they don't, at the end of the day, they've traded it back down, or in the morning they've traded it up, I am much less nervous because now I have a rationale that if they've traded it up this far, or in the early part of the day, if I close it here, I've gone against my probabilities. The worst case scenario is But it's trading right here at the end of the day. That's a different signal than what it produced during the day, which was trading back down again. So that was kind of a long verbally answer or description to say that I don't get nervous when I see things going against me until I see that it's a signal that goes against me. Dang was another one of those situations where it opened positive, and you put your sell. Come on. Well, Shazam. I don't know why this does this. Let's try another one just to see if. There we go. Scared it. Dang was a perfect example of it. Opened higher today. Notice how it failed up here and had a potential of a doji sandwich. It opened higher. When it started trading down, all you had to do was put your sell stop to go short at the previous day's close, because if it came down through there, it was creating another bearish candle, which meant it wasn't going to come back up and get above the 50 or the T line, which makes your next target down here at the 200-day moving average. And ETZM, bearish J-hook pattern in the making. Let's see if we can move this up a little bit and make it a little bit bigger. So if I've got a bearish Harami, a bearish engulfing signal, a close back below the T line, and we're right about the support level, if it breaks through the support, I essentially have a downtrending channel still in progress, meaning they're going to bring it down into this area. I want to be going short. And what was that? Okay, CZR. There's your bearish J-hook pattern. Once again, if this one opens lower, you can be shorting it. Even though you're closer to the oversold area, it's telling you exactly what we see when we see a bullish J-hook. We're going to be witnessing a bearish J-hook. And that type of pattern, that's the slow curve, is exactly what you want to get your eyes trained to see. Like in VJet, people were saying, man, it got crunched. But notice how we can see the slow curve. Then you had your doji sandwich taking it down, another doji sandwich taking it down. At this point, I mean, if you started shorting in here, and you have a gap down in the oversold area, what do you start looking for? A buy signal. So if I was short this one, right now I'd have my stop at today's open. Because if it opens lower tomorrow and comes back up through that area, that means that's the bounce. I want to be out of that trade. Let's see, LGTC. Kind of that slow curve. Now we have a doji sandwich that went through the 50, even though the 50 is not very big here. This one, I wouldn't be afraid of shorting. With the anticipation that if they come down and breach this level, they could be down into the $5 area. And Moby was a good example also of, if I wasn't nimble enough, that you had a bullish day, looked just like what it's supposed to be doing at the 50, which when they opened it today and traded positive, there was your Morningstar type signal. But when they came back down through this level, that told us two things. Number one, the little doji wasn't going to be a buy signal. And two, they weren't going to support at the 50. That was a time to, if you were short, stay short. If you thought about going short, that was a good time to start going short. Because if they failed at the 50, where's their next likely target? Down here at the 200-day moving average. PFPT, doji sandwich, failed at the 200. You stay short on this if you're short. And if you are already short, you just stay short until you see a buy signal. TSL, Doji Sandwich. This is probably going lower. Ah. CRTO, bearish engulfing, last support level there. This one is probably heading lower also. LCI. Notice how it failed. More than likely coming down here to, this one's more to show how easy it is to read that when they keep failing at the close back up above the T line. HMSY. Yeah, hold on. We'll get to everybody's requests after Jim does the double line. Here's HMSY. This one you keep an eye on because notice where they did this signal. Oh my goodness, off here. They gapped down in an oversold condition and did a big hammer signal. Makes this very simple. If they open this positive, you start buying. Your first place to watch diligently is the T line. If it gets through the T line, it's coming back up to the 50. So you got at least a good 15, 20% move back up to that level. And DDD, Doji Sandwich, slow curve. This is more than likely still in a downtrend. All right, so that's about all I got for tonight. Again, with the Dow not doing a signal, I would just be a little bit more apprehensive about shifting long or closing out any short positions just yet till we see some sort of confirmation. Now, it's not unusual for it to come right back up to the T line and bounce back down, so you might see that first thing in the morning. I would say right now I am probably 70, 75% short. In the downtrend, would you please explain deeper how you do differentiate between a reversal signal and a bullish up day and a downtrend? This was a bullish up day and a downtrend, and it's not a signal. Remember, the reason that we can see reversals is because we can identify candlestick signals, a bullish Harami, a doji, bullish confirmation. This is not a signal at all. It's not a bullish Harami because it opened above where it closed above where it opened. So it's not a bullish engulfing because it didn't open below the previous day's close. So this is just an up day. So what is the sentiment? Right now, if you just use the very simple, basic concept of trend analysis using candlesticks and the T-line, you're in a downtrend as long as there isn't a candlestick reversal signal and a close back up above the T-line. Right now, we need to see a candlestick reversal signal and a close above the T-line. Stochastics still heading down, but we're getting into the oversold area, so what would that imply? That would imply that we're probably not so far away from the 200 that they're going to come down and test it, and then you start watching to see if you start getting a signal from that level. Okay. All right, I guess with that, Jim, let's go ahead and do the double line. And Jim, let's go ahead and do the other double line. There you go. All right. That's mostly because we usually get most of the requests in from what's already up here. Plus, it stops the scrolling, right? I don't have to keep scrolling to catch up. Ford. Ford, you stay long, for the long term, as long as it stays above the 50 right now. And I would get ready to start buying this one if it starts coming back up through the T-line, because that tells me this trend channel is still pretty much intact. Sears Holding. Sears Holding, whenever you see that big kicker signal, you stay short until you see a buy signal. The diamonds, why am I doing this tonight? Anybody want to type correctly for DIA, the diamonds, same as the Dow. Need to see a true signal and bullish confirmation with it coming up above the T line. GLD, gold still in an uptrend. El Paso, nice J-hook pattern. This one you stay long, and you could probably even be buying this one with the anticipation it's going to go up into the $17 area. PSEC, wouldn't be long or short this one. There's no trend to it. It's stuck in a sideways channel. SDLR, SDRL, how's that? Uh-oh. This one, if you're buying it, it needs to open positive tomorrow, and then it definitely needs to get through the T-line. So you have a double bottom. Then once it gets through the T-line, you have to watch the 50 to see if this trend channel can be breached. So if I was buying this tomorrow, I definitely want to see what it does once it gets to those resistance levels. Juniper came back up a little bit, but still in the same scenario that the downtrend is in progress, especially with kind of this double top. I would think that they're still going to bring it down to the bottom of the trend channel, which kind of equates with bringing it right back down to the 200-day moving average. Now, on the other hand, if this opens positive tomorrow after today's bullish Harami spinning top, I'd probably close out the position and then just see what it does once it gets to the T-line. And W-Wave bounced back up. Well. There we go. So this one could be a reversal if it opens positive tomorrow on the Morningstar type signal. And again, if it opens lower, you stay short if you're short. Scotty. Nothing to do here except stay short until you see a buy signal and a close back up above the T-line. Halliburton. Oops, that's fall. Halliburton. This one you can get ready to buy on the Morningstar type signal, a close above the T-line. Look for this to come back up to the top of the trend channel. Notice how the bottom and the top of the channel, if I could draw a straight line, are somewhat parallel. That's what everybody else can see. Plug we did, FAS. FAS, same as the, practically the NASDAQ. This one has to open positive to trade it to the positive side, but just watch what it does once it gets to the T-line. If it opens lower, it means the downtrend's still in progress, and they're probably going to be bringing it back down to the 200-day moving average. I don't know whether we can get the VIX over here. Yes. This one, you stay long till you see a sell signal and a close back below the T-line. ECA, stay long until you see a sell signal and a close below the T-line. CRK. Nice J-hook pattern. This one you can be buying on positive trading. Anticipate the same trajectory as before the J-hook. On this one, the Russell 2000. Same scenario as the NASDAQ. You need to see a buy signal down here to tell you there's been a change of investor sentiment. Wheat looks like it did a reversal right off the 200, close above the T-line. Now this is a perfect example where they've traded it down a little after hours. It's your buy stop. One tick above today's close. If it comes up through there, that tells you the bulls are still in control. And CLNT, this one, it's right at the level where you couldn't be shorting it anymore. But right now, this one needs to open. Right now there's nothing here. It's right back into the muck of this sideways channel. I'd be, need to be looking at something else at this point. Oops. Let's see, we did rig. Rig is an update and a downtrend. GGAL. GGAL, you stay long as it doesn't close below the T line. AER. This one you should be out of, and possibly even going short on this one on a weaker open. Kind of a blue ice failure setup, which means they could take this all the way down to the 200-day moving average. Jazz. Stay short until you see a buy signal and a close back up above the T line. Dunkin' Donuts. Dunkin' has a good reversal signal. I wouldn't buy it unless it opens positive and starts trading a positive up above the T line. After the inverted hammer, that's usually a good good strong sign that the bulls will step back in. CMG, nothing here yet. As long as you're below the T line, you should be short. And Amazon. Amazon, you stay short. Notice today's trading was not very decisive, which means the buyers aren't coming in with any great force. Nike, I wouldn't probably be long or short. This one right now is getting junky, which means it might be bottoming, but there's no bottoming signal yet. And HK, this one broke out nicely. All you can do here is stay long. If I was long this one right now, I'd have my sell stop at today's open. If it came back down through there, that told you the profit taking's on its way. OCN, this one you can be buying on positive trading with a potential of a slow curve breakout through the 50 that could take you up real quick to the 200-day moving average. All right, Lisa. Oh, I forgot to do that one. Whoops, that's corn. Citigroup popped up nicely today. This one you can be buying. Now, it's not a real rambunctious stock. You're not going to make a great amount of money, but the probabilities right now of it coming back up to the 200 is pretty strong, so you could probably put a good little call spread strategy on in this one. Now, I put out a notice last night to the option trading room on FYEY that you could you could sell the 4850 April calls and buy the 5350 April calls for a credit spread, which would put $1.30 in your pocket. And as long as this stock closed below 4850, right now it's at 48.46. As long as this continued down for the next, I guess we won't have a market here on Friday. For the next 2 or 3 days, that $1.30 will stay in your pocket. So that's a credit spread. Not very big money, but usually high probability trades. Russ, that's the Russian bear. Stay long. That means the Russian market is still getting hit. Goog, stay short. More than likely, they're heading for the 200-day moving average. So far, there's nothing in here that tells us there's a bullish reversal. And Apple, Apple, I wouldn't be long or short. It's in kind of in this sideways mode. I'd be trading something else right now that has much better trend attributes to it. AT, this one you stay long, but I'd rather buy this one at 315, knowing that it broke out to the upside. And Goldman still in a downtrend. Now, it's gapped up today. It did a doji, which makes very simple analysis. If they open this positive, you've got a trend or a flutter kicker signal in progress, which means they're going to at least pop it back up to the T line. But a flutter kicker is usually pretty strong. They could bring it all the way back up into the moving average areas, which means if they're starting to bring Goldman up, that means the market will probably have indications that it's in the process of bottoming. EPB. Stay long on this one, especially if it opens positive. Now, if it opens lower and starts trading back below the T line, you close it out. That tells you that this shooting star doji is being recognized, I guess. First Solar, right now I wouldn't be long or short this one. It's in a slow sideways channel, and there's really no direction to it. And GMCR. What's S.GMCR? Stay short until you see a buy signal. Yum. Oh, Tom. I know there was a radio broadcaster that got fired because he said Tums was just smut spelt backwards. Yum, another one that I wouldn't be long or short. This is in a very slow, junky curve. I would rather pay 76 or 78.50 for it, knowing that it broke out to the upside. SPWR signal. CLF. Stay short. Especially if this opens lower tomorrow, it'd be a good short because you're observe the obvious. The obvious is that this is in a downtrend. And the 50 seems to be a resistance level. If they start selling this off, they're going to take it to the bottom of the downtrend, which could take you down into the $15 area. NVDA. Wouldn't be long or short here. This is that slow, junky curve. I'd rather see it break out above the 1920 level. That's where you want to start really paying attention to it. Otherwise, you want to move your money someplace else where there's a recognizable trend. Price line, stay short until you see a buy signal. See, we did HK. SSRI, we're still holding on to this one. As long as it stays above the T line. Well. SSRI. Now, this makes it very simple tomorrow. They need to open up positive and trade positive. And in a couple of days, it better break through this level, this wedge setting up. If it fails here, we'll come out of it and just wait for a breakout. NKA, stay long as you don't see a sell signal. Google did, Visa got kind of a flutter kicker setup. If you're short and this opens positive, actually you should have closed it out today if you were short, because anything in the oversold area where they gap up above the previous day's open, that shows you a strong bullish strength. You close it out. You can always re-short it if you see another sell signal set up. And CTL, a nice little J-hook pattern. This one you stay long. SGY, stay long. Use the T-line as your stop. NQ, stay short. Notice how every time it got back up to the T line, it would fail. Tells you the sellers were in control. And we could tell the sellers were in control because it was a sell signal every time it got back up to the T line. What do we got? CVS. Notice a slow rounding top. I wouldn't be in this one unless I see a buy signal and a close back up above the T line. LLL. This one you stay short till you see a buy signal. Notice, remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Honeywell. Honeywell, nothing here. Probably wouldn't even want to be short this one, only because of the lack of magnitude. Notice the sideways movement and not very big percentage moves. They can move all the way back up to the top here, and you only have a 4.3% move. And Kendai's probably following Tesla. This one you stay short until you see a buy signal. JKS. This one I wouldn't be buying until I see a convincing buy signal, and if you were short, I'd see what it does. You're already starting to see some buying. If it hits the 200, you might start covering at that point. GameStop. Wouldn't be long here. Definitely would stay short until I see a buy signal and a close above the T line. Let's see, we did BWP, right? This one, if it breaks out positive tomorrow, you want to be buying. Duke Power. Duke Power, you stay long. It's not a very exciting stock, but it's got a decent dividend yield. You just stay long until you see a sell signal. Now you stay long. You probably use the 50 as your stop. You don't want to see it come back down through that level. Let's see. We did PES. PES, you could be buying this one, especially on a positive open tomorrow. Tells you you're in wave 3. PH or AP. Yeah, it's got APH. Another one that I wouldn't be long or short. There's no movement to it. GILD. Another one where you stay short until you see a buy signal and a close above the T line. Okay, let's see. How many do we have left here? IBB. Stay short. BRTX. Stay short. GTAT. Another one that's probably you want to stay short. It's probably coming back to test the 50. See what it does at that point. How long do you watch a confirming signal for a buy before you enter? Some signals start off slightly negative, ending up with a bottom wick. If it opens lower and then comes back up through the previous day's close after a buy signal, I start buying at that point. I tell you the profit taking on the open is over and the bulls are still there, which is exactly what you want to see after a buy signal. Oh, let's see. Citigroup. Is that an abandoned baby? No. Abandoned baby is a gap down. This one, still a good signal. This is your best friend signal, doji gap up. But had it traded only up there and left a little gap there, then it would be more of an abandoned baby. CPE. CPE, oh, that's copper again. Son of a gun. CPE, this one you can be buying on positive trading coming out of the slow curve. Okay. Market's not doing anything of great magnitude here as far as giving us a direction. So sideways here, we're oh, that's nice. I think we're still drifting on the Nasdaq back down to the 200. It could be bottoming here, but I would think with the stochastic still heading down and no compelling buy signal yet, that's probably a likely target where everybody will start stepping in. All right, with that, we'll call it a night. We'll see everybody in the chat room tomorrow.